Hi, my name is Nana.
And I'm Emily, and we're from Miracle Practice.
And hi everyone, my name's Imran from Modus Academy. And this week, you sent me a question to talk over with you guys, and it was around mortgages. So can you obtain mortgages in England, Scotland and Wales? So good question to cover off, I guess, especially with everything that's been going on this year. I suppose we have to say to everyone that we're not mortgage advisors or brokers, so please seek advice from a specialist advisor. But it's worth us giving our thoughts and opinions, right?
Yeah.
Yes.
So is this something that's been coming up quite often then through the network in Sweden?
Yes, a lot have. People are asking this question all the time. And we always say that you should always go and shopping.
Yeah.
It's important to go shopping. I think that's probably a good way to start. So traditionally, I think when we think about mortgages, we think about buying our own home. So we always think, we go to, I guess you guys would be the same. You go to your own bank, right? Is that the same in Sweden?
Yeah.
Does that work in Sweden?
Yeah.
Or you go on a website that have like every lender, and then you put in your social security number, and then it comes up the different, and then you can challenge your bank. But obviously it's not like that in the UK when you're doing buy-to-let.
No, it's different. And this is, I think, the key thing, and this is where people make that fundamental mistake. I'll just go to the normal high street banks like HSBC, Barclays, Lloyds, and I'll apply for a traditional mortgage. Handelsbanken as well, that sort of standard process that you would have. Thought I should have mentioned a Swedish bank as part of that process. But actually, in the UK, when you go to a mortgage or finance broker, it's about going to an all-of-market broker and actually going to these people that don't necessarily just work with the big banks. They actually work with, probably private offices, family offices. The funds that are taken out for investment properties could be from pension funds, hedge funds. They could be from so many different places. And that's what makes the UK quite a unique place to invest, because lending is much more open, I believe, in comparison to other style of investments in other countries. Would you guys agree?
Yes. And that's also one of the reasons why a lot of people from here are looking into UK market to build a portfolio or have a couple of, even if they just want 2 or 3 buy-to-lets, they're still looking at another market than Sweden because of the lending and because of the ways that you can do a deal.
Yeah, and often one thing you were saying to me when you sent me this question over was around the sort of loan to value as well. So you saw the lending options are there, but you were saying something about sort of, you keep hearing the term restrictions on the amount of money you can borrow or the value of the property needs to be. What was it that you were hearing or saying?
Yeah, we heard 200K.
Mm-hmm.
And then I think I heard one person said 152, but a couple has also actually said 200K.
Wow.
And that's not our experience at all, not even during COVID. It hasn't been that amount.
No.
Yeah, and I agree with you. So actually, you find that, look, whilst it is property dependent and is about the situation, you, the director or owner of your company, that, I've had a situation recently I was on a call with a broker and with a client, helping them with their mortgage situation. And even then they said, look, as long as the asset is worth, £100,000, then these are the type of exciting rates when it comes to your interest rate that you could achieve. And they also said that actually, if the property's worth less than that, say it's worth £80,000 once you've done your refurbishment and you've added value, that it's not that we can't get you lending, it's just the interest rate might be slightly higher. I think the appetite at the moment is ideally they want the assets to be worth about 100 ideally, but if it's lower, I don't think it's a closed door. And I think this again goes back to that fundamental mistake that investors tend to make, that rather than just going to a typical bank or one broker, actually working with an all-market broker and working with multiple brokers and speaking to them consistently all the time, because they might have different banks or lenders that they go to. I guess you guys, Nana, you probably speak to every broker in the UK, I guess, really, don't you?
Almost. No, I have a big list, but that's so true, because some finance institution want you to come over, and some are like, it's all right. You can just send it through the application to them, and they will say this is good. So I'm not gonna name drop the banks and etc. But I can just say, I can give you one. Roma Finance, exactly. They want you to come over to the UK, and they want to have a chat with you
and verify that
you are you before they'll give you lending. And they are like in the lower end, lower like 75, etc.
Yeah.
So there are lenders out there, like you were mentioned, family-run institutes or people that just want to learn. You just need to go out and do your shopping, and you'll find a broker or a lender.
Yeah, and also keeping in mind that you can get a loan on, let's say 75K, but the loan to value might not be 75%.
Yeah.
So that's also something you need to think about, that, okay, if you buy a property that's worth 150K, you might get a better loan to value or a higher loan to value.
Yeah.
It all depends if you want that, if it's a better for you or not. Maybe you don't want to leverage that much, but if you go to the properties that is around 75K, for example, you will get loan to values that are a bit higher. We even spoke to one broker that says you can get down to 50K, but then it will be loan to value of 50%.
Yeah. So you're going to leave. So if you've bought a deal where, if you're going to use that loan to go into a deal, then you need a 50% deposit. Or if you were doing it on a refinance and it was, it wasn't worth much at the back end, let's say it was a lower investment in Scotland, then you're still going to leave in probably a larger amount of money in the deal. So you just have to do your calculations. So I guess sort of it's really important that if there are going to be variances on the loan to value, to ensure that when you're running your numbers, have almost like a rolling scale of what your loan to value might be, from sort of 60 to maybe 75% on average. Of course, if you are buying, like you said, Emelie, a lower entry property, you might even want to go 50% loan to value. But the moment you start to get the values up, probably 60% upwards is where you might be. So good point there, really good point.
But just so like really shop around. Don't just ask one or two brokers and go with, okay, now I asked everybody. No. You need to ask like 4 or 5 brokers. Nana has so many, I don't even remember all of them. But he asked them constantly, like a regular basis. He asked them, so what's up now? How does it look now for us? He has contact with them on a regular basis, all of them, which is a work in itself. But yeah. But the only thing that we have experienced is when it comes to Scotland, it will be harder. Some say Wales will be harder, but we haven't seen that. We get the lenders to go into Wales. We don't have any problem with it. But Scotland, we got one lender.
Yeah.
In Scotland. So
yeah, exactly. It is possible. But I think you're right. It's just a little bit more challenging in Scotland just because of the value of the assets. Whereas, like you said, I've not seen anyone that had issues in, say, Wales or in England in regards to that side of the lending. And you're absolutely right. Shop around. You have to treat a mortgage broker almost like when you go onto Amazon.com. If you search something on Amazon, there are thousands of products. If you typed in mortgage broker on Amazon, you need to see lots of contacts. You would want to research and look at each product and make a decision. So it very much is about shopping around. I think that's an important point. So I guess the summary is shop around for your mortgage broker. Don't just go with the first rate you're given, and don't always think about, I guess, the normal high street banks. There are so many other options out there. Get creative, because there are so many ways that you can finance deals.
Yeah. And also, just to fill it up with a little bit, the last gem of it, think that all brokers might have different lenders. So that's the reason why you need different brokers, because they don't have the same. That's often something that we from overseas might think, that it's the same lenders. It's not the same lenders at each broker.
No.
Yeah. Absolutely. And that's a really important point, because that's something, their broker, their role is to go out and find different products and different lenders out there in the marketplace. And you're absolutely right, they may not be the same. So broker A and broker B might have different lenders out there that will work with you as international investors, buying here in the UK. Really cool. Great question. Really cool question to ask. He's already signposting.
Subscribe, people.
Nana's already on it. So yeah, as Nana said, just subscribe. So if you liked what you've heard, just subscribe to our channels, Miracle Properties and Modus Academy, and like this post, share it out there if you like it. If you want to know more about bridging or any other questions around that, pop some comments below and we'll do our best to answer them in a future video.
Yes.
Yes, of course. Just ask questions on everything you need to know.